All right, hello and welcome. And this is Robert Quebeca, and I am the host this evening for our incredible workshop, the Business Masterclass Workshop Series, Bootstrapping, Budgeting, and Funding. And this is part of the Meetup group that I operate, Startups Breaking Barriers and Getting It Done. We have about 2,680 members, something along that line. So just want to thank everybody for being here. We're not quite ready to get started, but we will get started in just about, I don't know, 3.5 minutes or something like that. So I'm going to just pause my camera for the moment and mute myself, and then I'll come back on here in just a couple minutes. Here, we got the audio here. And now let me see if I can get my video turned back on. Hello, I got my video here. And I got my video here. And it looks like we're in better shape now. So it's 1 minute before the top of the hour, actually a little bit less than that, but we're going to go ahead and get started here. As soon as folks start coming in, or more folks start coming in, we will welcome them. Okay, so hopefully everybody can see me. Hello and welcome both here on Facebook and YouTube through StreamYard, as well as on Zoom. Okay, so on Zoom, you should be seeing a slide that says Welcome Business Masterclass Workshop Series. So let me show you that same slide here on Facebook and YouTube. Super. So welcome. My name is Robert Quebeca, and I am the host of tonight's Business Masterclass Workshop Series entitled Bootstrapping, Budgeting, and Funding. And this is part of my Meetup group, Startups Breaking Barriers and Getting It Done. We have over 2,600 members in our Meetup group, and I'm grateful for all of you all. This is a very old Meetup group, started way back when in 2014. It's a phenomenal group of people, and I appreciate everybody's involvement and participation. And I put together this workshop series. This is week number 3. The first week, 2 weeks ago, 3 weeks ago. We've been doing it every week. So 2 weeks ago, I guess, we did idea validation and vetting and doing your 30-second elevator speech, that type of thing. Last week, we did the business plans, doing a 1-year business plan, a 1-page business plan, that type of thing, really getting your idea on paper and understanding what your business needs are. So today we're going to talk about finances. We're going to talk about personal finances, business finances. We're going to talk about how to know how much your business actually needs to operate, how much you need to be profitable, how much money your business needs to make so you can actually pay yourself a salary and benefits, right? Based on your personal budget and your personal spending plan, okay? So having said that, let's just jump right in. And I have to navigate between a couple different pages here, so forgive me for that. And these are the discussion points that we'll be covering today. We'll talk about financial stability, goal setting, strategic planning, risk management, attracting investors and lenders, resource allocation, decision-making, business growth and expansion, compliance and accounting, and sustainable profitability. All right, that's a lot to talk about in 1 hour, but we're going to do our best. This is recorded, so you'll be able to watch the rerun. In future masterclass workshops, we're going to go into some of these a little bit more specifically because they deserve it and they need it. So we don't want to leave any missing pieces or anything like that. Now, let's see here. So introduction, just real quick, myself, Robert Quebeca. Here's my email address, robert@thecoacheshelper.com. My telephone number as well, if you want to get in touch with me, 703-870-0436. Presently own 11 businesses. My primary business is a executive business coach and mental health coach. And I am also an IT cybersecurity expert, TV producer. Just this last weekend, I got authorized to produce 2 new TV shows here in Portland, Maine. So I'm pretty excited, maybe a little bit scared and nervous about that at the same time. An artist, writer, musician, chef, pastry chef, chocolatier, and much, much more. I've owned brick and mortar shops. One was a restaurant in Washington, D.C., and the other was a chocolate shop, also in Washington, D.C. And I just love owning businesses and making money through that way, you know, and the whole purpose of that is to influence other people's lives and to give them something really wonderful and joyful, a benefit to them, right? So let's take a look at, I just started talking about why I'm doing this. Yes, I love teaching. I've been an instructor for, 20 some years. Teaching IT security, teaching business concepts, fundamentals, leadership, certified leadership coach. I love successful businesses, and I love to help people grow a successful business. Find out why your business isn't working the way you want it to or the way it needs to be profitable, so it can fully support you and sustain you and give you the lifestyle that you want. Okay. So that is the primary aspect of why I'm doing this. And I put together this series for that purpose. All right. And this is free. I'm not selling anything here. I'm providing information. I've been a SBA score mentor, and I loved helping businesses through SCORE. And that is one place I will definitely refer you to get some of the worksheets that we're going to be reviewing tonight. I'm a big fan of SCORE. That's all. And when I first started my first business, oh my God, not my first business, but my first brick and mortar business in Jersey City in 2000. Memory might be slipping a little bit. 2000, 2001-ish, somewhere in that neighborhood. I went to SCORE for the first time, and I was really impressed with the amount of generosity that they had in terms of services and resources that they just offer for free. And so part of my being a SCORE mentor was to give back, pay it forward, right? So anyhow, I didn't want to go down that rabbit hole too much there, but just to kind of give you a little bit of context. So as we go through this, we're going to first start to understand what your personal goals are. Well, you're like, well, I thought this was a business workshop. It is a business workshop. You are in business to make money. Well, why are you making money? I'm assuming that part of the reason you're making money is so that you can pay yourself, right? So that you can earn money from your business, take money out of your business, put it into your pocket, your bank account, and to live with, live from, do things with, right? So before I ever recommend anyone to start identifying what their business financial needs are, my first question is always, what are your personal financial needs? Because if you don't know what that is, you're not going to have the peace of mind that you need to earn the money from your business to pay yourself, to support yourself. Now, most of us entrepreneurs, 99.9% of us, are incredibly creative, incredibly imaginative, and we love solving problems, and we love to think about what we're passionate about. And we find ourselves thinking about what we're passionate about 24 hours a day, maybe 26 hours a day. I'm not sure. That whole time stream thing can be quite interesting for us entrepreneurs. So at any rate, the point is to have a clear understanding of your personal financial needs. Now, you might be single, you might be in a partnership, you might be married, you might have one kid, you might have 10 kids, you might have pets, you might have other dependents, other family that you're responsible for. You may have a huge mortgage, you might have a car payment, you might have medical insurance that you're paying for, all these things. And all these things add up to monthly expenses. And they're not all due on the 1st of the month or the 30th of the month. They show up in the middle of the month. Surprise, your insurance payment is due on the 13th and you need $350. All right. And all of a sudden you're like, oh, crud, I don't have it. How am I going to get it? Right. So we don't want surprises. Surprises in business are not a good thing. That's why when you look at quarterly earning reports, from the stock market investors and what have you, you'll notice that if their numbers, whether they're good or bad, if their numbers are what they predicted them to be, all right, the market treats them reasonably well. If the numbers are not what they predict them to be, whether it's good, overestimated, or underestimated, it tells the market that, hey, we really don't know what the heck we're doing with our business here, and money's just coming and going, and we just don't have a handle on it. So, we just made a wild guess, and apparently we're off. So keep buying our stock, please. We promise you it's a good investment. Yeah, it doesn't work that way. They're stock tanks, right? And people, lose money unless you are future better and derivatives and all that other kind of fun stuff. We'll leave that for another day. So point is, right, if you don't know your numbers, you won't be able to talk about them to the people you need to talk to them about. Your private investors, your personal investors, banks, any vendors that you're looking for credit from, any real estate holdings that you need to acquire, any leasing agreements that you need to have. You want to know what your numbers are from the ground up, and you want to start with yours. All right. So if you feel like I'm going around in a circle here, I am on purpose, because I cannot emphasize enough how many entrepreneurs I've worked with, and I have worked with hundreds of them. All right. How many I have worked with who, when I talk about this, are like, well, I don't know, I'm just going to make enough money in my business and I'll have enough to support myself. And surprise, things don't work out really well. The idea of build it and they will come doesn't materialize as often as we would like to believe it does. Okay. So identify what your personal goals are in your life. Your business is, of course, part of that, as it should be. But what else? Vacations, trips, buying a really nice home or really nice car, a nice school for your kids, what have you. whatever it is, the lifestyle, the clothing, concerts, movies, shows, whatever it might be, Las Vegas, Paris, I don't know. It doesn't matter what it is, but you need to know the kind of lifestyle that you want to live. So you need to know what to demand of your business, because your business works for you. It's not the other way around. All right. Your business works for you. All right. And you're the one who's in charge of it. So you are the one that needs to know what to do with that business, so that business can give it to you to live the lifestyle you want. Now, the flip side of that also is that you're going to want to know what your business goals are. I'll get there. I'll get to the page in a second. You're going to want to know what your business goals are, because of course, you want your business to grow. You want to have more clients. You want to be able to charge a good profit margin for each of your sales, regardless of the businesses, right? So let me go to the next slide here and here. Okay. Oh, wow. I'm recognizing that for some reason on Facebook, YouTube, the details of the slides are not showing up, and I don't know why that is. If you give me 1 second, let's hold here for a moment, please. Let me remove the stream. Hi. And let me add a presentation, slides. No, I want to add, can I delete this one? Yes, I can delete that one, delete that presentation. Present slides from my computer. Okay, thank you. Go here, presentation. It should take, let me just go through this real quick. Aha, there they are. Okay, so I see what happened there. So give this just about 20 seconds, maybe, is what it took last time. On the StreamYard, Facebook, YouTube side there. On the Zoom side, thank you for your patience there. So I apologize for you folks on YouTube and Facebook through StreamYard that you weren't able to see the details of what I was talking about. So now, let's go here. Here we go. Discussion points, introduction. Why am I doing this? What are your personal goals? So this is what I was talking about. So just real quick, how much money do you need to live on, et cetera. So now we're going to talk about the business goals. Okay. So what are your business goals? How much does your business need to earn to be profitable? Now we're going to go into details of both the personal and business financials. We're going to get into cash flow statements. We're going to get into break-even analysis. We're going to get into balance sheets and profit and loss and startup costs and what have you. I've got like 5 worksheets that we're going to go through here. All right, so don't worry, we're going to get down to the fine details here. So how much does your business need to earn to be profitable? Is it $5,000 a month? Is it $30,000 a month? $100,000 a month? To be profitable. And what does profitable mean? Profitable in what context? And so what does actually profit mean? So forgive me for going to this rudimentary level here, but I'm just assuming that we're going to start from the basics and work our way up. So you have a cost for an item. Let's call it $5. All right. And you have a physical space, a store space. All right. And you have overhead, you have electricity, you have utilities, you have cam charges, you've got rents and whatever. So you've got all these overhead expenses. And you need to charge what's called a margin. So from the cost of that product or service, you need to add a margin that's going to cover your overhead. Now, if your building costs are $2,000 a month, you're not going to add $2,000 to that $5. No, you're going to guesstimate, well, I'm going to make, 1,000 sales a month. So that's $2. All right. So I got to add $2 to the cost to cover my margin, to cover my overhead costs. So now we've got $7. Now we have our other expenses. We have labor costs. All right. We have insurances. We have, blah, 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 whatever all our other costs are for our business. All right. And also, we want to take a portion of that. Again, you're estimating 1,000 sales a month. Let's call that another $4. All right. So now we're up to $11 for the cost of our product and service, including our overhead. All right. For the overall place and the direct overheads. Okay. So we're at $11. Now, how much profit? Everything above that is profit, except for taxes. So bear with me there. So how much profit do you want to make on top of that $11? All right. And your industry might have an average. So you might look online and find out what your industry average is. If it's a restaurant, you're looking at 40%. Okay. So we're at 11. So we're going to say, all right, so now this is like a $28 entree. All of a sudden, it's got an $11 cost. Now it's $28. All right. That's wrong. $18. Sorry. I added an extra one in there in my math. So anyhow, so we're at $18, right? Because we've already included our overhead costs and labor, everything like that. So we're looking at that profit. So that's, if I said 18, we're at 8. So that's $7 profit margin off the sale of one item. All right. Now that's your gross profit. All right. Your net profit comes in after you take out all of your taxes. All right. And taxes are taxed not on gross sales. Your sales taxes are taxed on gross sales, and your sales tax is always on top of your sales price. So if your price is $18 and New York State taxes or New York City taxes $9, I'm sorry, 9%. Okay, so you want to add 9% onto that. All right, just one second here. So you want to add 9% onto that. Now, when you add that 9% onto that sale, what ends up happening is that you have to pay that, right? So you keep that in a separate account, a tax account, and every month you pay that to New York City, New York State, et cetera, et cetera. All right, but that's not included in your margins, okay? That's an additional cost. So, however, at the end of the year or quarterly for businesses, we file quarterly income tax with the federal government. So we have to take out whatever percentage that is out of our profits. So whatever profits we have, all right, if we have a profit, that's what we pay taxes on. If we don't have a profit, we don't pay taxes on that. All right, I'm not a tax accountant. I'm not a lawyer. I'm not going to tell you what's right or wrong or what to do or not to do. Go to a licensed professional. So in that regard, when we're looking at how to price your object, all right, and to understand how much does your business need to earn to be profitable, all right, you know what your costs are, you know what your overhead is, you know what your markup is, you know what your taxes are, et cetera, et cetera. And now you can say, you know what, I want to earn $10,000 a month in net profit. So if you want $10,000 a month in net profit, now all you have to do is reverse calculate all that, and you'll know exactly how many sales you need at what sale price in order to accomplish that. All right, and that's just a very rudimentary example. All right, but without profit, your business cannot grow. Well, let me rephrase that. Without profit or investment from outside investors, internal investors, additional capital. Without additional capital on a regular basis, you don't have the money to pay the expenses to run your business. Okay. So there always has to be money coming in order to pay for the expenses that your business is accruing on a daily basis. And that's either through sales on a regular basis or it's through additional capital investment. All right. And some companies like Uber, they've still yet to earn a profit. Right? How many years have they been in business? Right? I worked for them the first year that they were in business for 6 months, way back when in 2012, 2013, something like that. And they were just giving money away, and it didn't care because investors were just piling money in, right? And so even though Uber hasn't shown an official profit yet, right? It's been able to pay back investors, been able to do all these different kinds of things, but they require additional capital investment constantly in order to meet their expenses as they hopefully get to a place of profit at some point. All right, I don't want to digress. So it might be too late. All right, so In that regard, what we want to do is, again, identify what your business goals are. You might have a goal of increasing your business's growth 10% or 20% year over year. The percentage doesn't matter. What matters is that you have a plan. And just throwing a number out there like 10 or 20% isn't really viable unless you really know the numbers that are supporting it. What are your numbers now? All right, what are your costs? What are your expenses? We're going to go look at a template, a spreadsheet here in just a bit, and look at how to figure out what that is exactly for your business so that you have all those details so that you can make really good decisions. And that's what it's all about as a business owner. It's about making really good decisions. And you can't make good decisions unless you have good information. So your primary job as a business owner is to make sure that the decisions that you're making are being based off of good information. All right. Okay, so let's take a look at the next slide here. And give me just a moment to switch slides over here as well. Okay, so do your business goals support your personal goals? So remember we talked let me just grab a sip of water here real quick. Remember a few slides ago, we talked about your personal goals. So if you had a personal goal that you needed, that the lifestyle that you wanted to live required $5,000 a month, just throwing a number out there, $5,000 a month. So you need your business to pay you $5,000 a month. Is your business profitable enough to pay you that $5,000 a month without hurting or jeopardizing your business's activity? That's a really hard question to answer sometimes, especially when you're just starting out in business. Some of you might be looking to buy a business, or you may have just bought a business that's already earning a certain amount of profit. And you're just getting your understanding, your hands around what's really going on with that business, right? You're doing all kinds of analytics and figuring out all the finances and everything. But you still need to understand what that business is capable of supporting so that if you're going to draw money out to pay yourself, that you're not depleting the necessary resources of that business. All right. Sometimes business owners like myself, when I had one of my businesses way back when in the 1997, I was a carny. I operated 7 different concession stands in an amusement park outside of Washington, D.C. Right. And I had 15 employees, et cetera, blah, 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 blah. And it was a summer gig. Right. So for 3.5 months, I got great pile of cash. I paid everybody, blah, blah, blah. It was great. But what I didn't do then, and I was very young, I was in my 20s. And what I didn't do was plan for when I didn't have money. So I didn't put money aside. So where did I go? I went to Domino's Pizza and became a manager for 6.5 months out of the year. All right. And the next year that I did it, I learned it's like, okay, I need to take some of this money and put some of this aside so I can support myself so I don't have to work a 50-hour week as a manager at Domino's Pizza. All right. So we learn our lessons any way we can just so that we don't repeat the mistakes, preferably. So I needed to know, and that business was really profitable. I had a great profit. It's an amusement park. I mean, the profit margins are outrageous or silly, but I was like a kid who felt like he hit the lottery. And I'm just like buying the big meals and this and that and the other thing. And just like, not buying friends, but, treating friends out. It's like, here, let me buy you this. Let me buy you this. I got plenty of money, blah, 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 blah. And great. That was more ego than anything as a kid, understanding that now. But at the same time, I didn't understand the business aspect of it then. I learned really fast and I smacked my face into a wall. I learned what to do differently. And so my goal here is to help you avoid those mistakes. Okay, so is your business supporting your personal goals? We're going to get to a break-even analysis worksheet. We're going to get to all these worksheets here in the next 10 minutes. And we're going to go look at a break-even analysis and what that looks like, based on your startup cost, how much money you need to get started, et cetera, et cetera. I'll explain it all. So let's take a look at this next slide here. So how much money does your business need to make? How much money does your business need to make to support the lifestyle you want? So here's an example. So I'm an executive coach. That's my primary business. And these are not my numbers. My numbers are good. But I wanted an easy example. So let's say that, you're starting out as a coach in the coaching world. It's like, oh, I want to make 125 grand as a coach every year. And I know I've worked with coach. I am a coach's coach. All right. And I have a done for you coaches business. All right. Anyway, so I'm not selling anything here. Point is that I get coaches come to me and say, yeah, I'm going to make 125,000 a year, and they think that they can become a coach and have a 6-figure salary right out the bat. All right. And it's like, okay, well, let's walk through that. So you want to make $125,000 a year. Well, the first thing we're going to do is take 33% off the top of that. 33% right off the top, because Uncle Sam needs their money first, and they're supposed to get their money first. All right. And they're supposed to get it 4 times a year, not once a year, as a business. Now, as a coach, I know what expenses are for a coach. I know what marketing expenses are. I know what advertising expenses are. I know what maintenance and website, all that. I know what those expenses are, 25%. All right. So now we're going to whack another 25% off of that. So now you're looking at $60K before personal taxes. That 33%, that's just your business taxes. All right. So now you're looking at your personal taxes. So now you're in the $60K tax bracket. And now you need to look at how that's going to affect you. All right. So, but let's just keep it at $60K to keep it simple. So for you to net, let's say pretend net $60,000 a year as a coach. All right. How much are you going to charge? All right. You want to charge $100 an hour. That's a very low rate for a coach, but I'm just picking easy numbers. All right. Mine's $375 an hour. $100 an hour. So if you're going to do $100 an hour, you're going to need to put in 1,250 coaching hours. All right. To get to that 60,000. That means doing 24 hours a week worth of coaching. You're like, oh, 24 hours, that's a dream job. Great. Yeah. How many clients do you need? That's 24 hours per client, not per week. So it's going to require you to have 52 continually paying clients per year. All right. 52 continually paying clients per year. All right. And as a result of that, you need to understand how much time and money you need to get those clients. Okay. So now this is just a really vague example. I'm not vague, but just a rough example of what that looks like, because all of a sudden you're like, wow, that's not 24 hours of work a week at all. That's more like 55 or 60 hours a week. And I'm like, yes, it is. And a lot of people are surprised by that when they go into the coaching business. All right. Now, once you've reached a plateau and you've got your reputation and everything else like that, all right, then you can do things differently. Then you are working 10 to 12 hours a week at a higher rate, and you're managing your clients in a better way. You're managing your expenses in a better way, et cetera. All right. So this is just one example of how to understand, how to understand the misunderstandings we have about our finances in business. So you might have a brick and mortar store, you might have an online store, what have you, whatever the case might be. You might be in retail, you might be in the service industry, doesn't matter. You might have a restaurant. The concepts are the same. How they're applied is specific to your business, your industry. So let's take a look here. At the next piece here, financial stability. So how do you ensure your financial stability? So what do you need to do consistently each day to generate revenue? Doesn't matter what business you're in the business to generate revenue. To build your client base, you're selling your product or service to someone. They are your customer. They are your client. That is a relationship that you need to build, and it takes time to build a relationship. Even if you never see their face or talk to them on the phone, you have a relationship with them. They have a relationship with you and your business. All right. So how are you building your client base? How often are you looking for cost efficiencies? All right. And I know a lot of new business owners who are like, oh, I got to buy this service and pay monthly fees for that service because then I need all these bells and whistles and everything like that to make my job easier. And then what ends up happening is that you're spending all this time trying to learn all these new things to make your job easier, and you've got no time to run your business. All right. You're trading your valuable time, for learning something that you then have to do or teach someone else how to do. Right. So I always recommend when you're starting out, find out the things that you have time to do, that you want to do, and that you can do well, and then hire somebody else to do the rest. No joke. All right. That's the only way you're going to have peace of mind. It'll allow you to focus your attention on the areas that you need to focus your attention on. And I can promise you that your business will grow just from that. All right. Because wherever your attention is, that's where your energy is going. And if your energy is here, 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 and here, you're not able to focus on generating revenue. You're not able to focus on building a relationship with your clients and making sales, generating revenue. And that might mean making a daily blog post or weekly blog post or video blog post or podcasts or, Instagram post, TikTok post, Facebook post, Pinterest post, Twitter as of this weekend. I'm not sure what's going on with Twitter. Something happened to it, right? Anyway, so point is that, you need to spend time doing that. And if you don't want to spend the time doing that, you need to hire someone who can, because every successful business has consistency as its foundation. And without that consistency, you are not going to be able to guarantee that every month your business is going to earn the profit that you need it to earn, so that you can draw the money out of it that you need to live the lifestyle that you want to live. Okay. And it's very important to have that clarity and that separation. So let's go to the next slide here and look at our financial risks here. So how much risk is too risk? All right. Number one, I'm a cybersecurity expert. I built data centers and security operations centers for the federal government for 14 of the New York City hospitals, city-owned hospitals, et cetera. Done that for many years. And I know a lot about risk. I don't know it all, but I know enough. And I know a lot about business risk. I've had over 25 businesses in my life, and I know what it's like to bet on a dying horse. I hate to use that example. Don't know why I did, but it's what came to mind. But point is that I know what it's like to take a huge, huge risk, to risk everything that I own, everything that I have, and fail. All right. It's a very sickening feeling. All right. So there are times when I was willing to risk what I thought was a reasonable risk to get the great reward. All right. That might be considered gambling. All right. I don't want to label it or anything else like that, but a business is not a casino. All right. We're not talking about casinos, but my point is that we don't gamble with our businesses. Casinos are in the business of making money. They don't even gamble. All right. With their taking risks. They only take very specific calculated risks that are in their favor, and you should do the same. All right. Your business is in business to be profitable, to deliver a product and service with enough profit margin to satisfy your customers so that they are repeat customers, hopefully, and come back through that relationship. All right. Having a repeat customer is a lot less expensive to keep than getting a new customer. That's on another webinar that we're going to do in the next couple of weeks. So how much risk is too much risk for you? And everybody has a different risk threshold. My risk threshold is not yours, and vice versa. And I'm not going to tell anyone that their risk threshold is wrong, because your risk threshold is defined by you from your own experience, from your own goals, from your own desires, your passions, your creative imagination, and all that wonderful stuff. That is your risk threshold. How much are you willing to risk in terms of time, resources, money, et cetera, et cetera. All right. And for each of my businesses, honestly, I have a different risk threshold for each and every one of my businesses. All right. So it's not the same risk threshold across the board. Right. And you need to know what you're willing to risk for your business to be a success. And there's no wrong answer. Just know what it is and honor it. have that integrity to honor your risk threshold. Okay. One of the biggest risks is, again, not having clarity around money. So if you haven't done that financial spending plan, we're going to talk about that. We're going to look at a spreadsheet. If you haven't done your business financials, you're not going to have the clarity you need. If you don't know how many sales you need to make at what margin, you're not going to know how much profit you're going to need to pay all your bills and to pay yourself. Vagueness is not our friend. Vagueness generates fear. It generates uncertainty. It generates guessing. We start second guessing, triple guessing, quad guessing, and that creates stress, which becomes this complete loop, which we get stuck in, which makes it almost impossible to make a decision. All right. We get stuck like deer in headlights. We can't move. We can't think straight. We're just like frozen in time because we've become petrified to make that decision because we don't have enough information. So if you find yourself afraid to make a decision, it's not because there's something wrong with you and you're a wimp because you're afraid. That's no such thing. It just means you don't have enough information. Go get information. And I can promise you making that decision will be so much easier. That fear will dissipate. All right. So yes, this is a money class, not a business psychology class, but they're very well entwined. Okay. One of the other really cool things that I have found for myself is having a job description for myself. Do you know what your job description is? So one of my businesses, my goal is for it to generate $30,000 a month in gross sales. That's itsearchtraining.com. It's got 200 and some odd information technology and software courses out there available for people to buy in bundles or whatever. And so to generate $30,000 a month. Okay, great. Well, what is my role and responsibility on a daily basis, weekly basis, monthly basis, as a business owner, as a manager of someone responsible for generating $30,000 a month in revenue? And that's gross revenue, by the way, right? So what's my job description? And I do this for each one of my businesses. And what's hysterical is sometimes I look at that job description, I'm like, I'm not sure I want to hire myself for that job. And so then I got to parse it out and it's like, all right, I'm going to create a new position for somebody else. And then I'm going to give them all the icky stuff that I don't want to do. You may not be in a position to do that. You may be, but the point is to have that clarity. Know what your job is for your business and don't keep it up here in your head. Get it down on paper. All right. Get it down on paper or computer, whatever the case is. Just get it out of your head onto something that you can see and interact with. That is the most crucial thing. When you have a job description, you'll be like, oh my God. You get up in the morning, you're like, I know what I need to do today. All right. And then you're able to go do it. It's awesome. I can't speak highly enough for that. So business owners saying, oh, I'm just going to do everything. Yes, you're going to do everything, but what's your job? So, and I'm happy to talk about that further with anybody as well. I'm just a big fan of that. Okay, so let's talk about budgets and spending plans. And there's a difference. So you're going to want a budget and a spending plan for your personal life and for your business life. All right. So your business should have a budget and spending plan, and that's going to come out of the worksheets that we're going to be looking at here just shortly. And you should also have a budget and spending plan for your personal life. Having a spending plan for your personal life is going to tell you exactly how much you need to withdraw from your business each month or each week, however often you want to get paid. Doesn't matter. But that's what's going to tell you how much that is. Okay. So let me see if I can get that here. And let me go here. Sorry, I know if you're on Zoom, you're seeing all this sliding around. We're on slide 11. Let me stop the presentation, share the screen. Okay, so now, oh, is it really not doing that? It's really not doing that on StreamYard. Why? I'm sharing the screen, but it's only seeing the web interface. All right, so how can I make that happen on StreamYard? I have to get StreamYard support to figure out, or something to figure out how to make that work. I'm just trying to show the spreadsheet here, and it's not part of the presentation. So how can I do that? Sorry for my little snafu here. I'll have this figured out by next week at any rate. All right, so let me try this real quick. I'm just going to go book 1, go here, 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 here. Week 3, go there. That's saved. Go here. And now I'm going to go to present slides. Oh, it's not going to do that, is it? Because that's a spreadsheet, not a slide. Oh, drats. I'm not sure how to make this happen, folks. I am sorry about that. So if you're on Facebook or or YouTube, I'm going to have to find a workaround for this, and I don't have one because it's not letting us see the the spreadsheet like we can on Zoom, and I don't know why. It should be showing my desktop because that's what I have configured. Let me just look at one more thing here. That's gonna try this. Nope. Add item. Media screen shares. No, this is not what I want. Yes, discard changes. All right. It won't let me share my desktop through StreamYard, and I got to fix that. So my apologies. I'll do my best to be descriptive as possible. And if you're watching this on Zoom, I can redirect you to Zoom. So if you're on Facebook or YouTube, I'll put a link to the Zoom replay here. So basically what I want to do is just kind of show you, a budget versus a spending plan. All right. So a budget, how you determine that first is you want to go back 3 months in time. Let me make this bigger as well so we can see it nice and clear. All right. So for a budget, we want to go back 3 months, 3 months of data. And your personal account. Go to your bank account, all your bank accounts, whatever the case might be, and just get a really good estimate of what your monthly expenses are. So how much it's costing you for rent, various insurances, how much it costs you for food, being realistic, how much it's costing you for education or anything else like that, how much it's costing you for utilities, transportation, and the list goes on and on and on. And this is personal, right? This is your personal spending plan, not the business spending plan, because you want to find out first what that is. So you're going to get the average, all right, the 3-month average, all right, of what all of your costs are. The spending plan takes whatever these values are, and let's just put some numbers here. I know these are not New York numbers here, but anyway, education, I don't know, just put 100 here, utility, 250, whatever, transport, 175, blah, blah, blah. So those are just some made up averages there. A spending plan and a budget is limited. So budget is restricted. I am not allowed to spend more than $1,500 a month on rent or $500 a month on food. That's it. That's my limit. All right. And you're not allowed to break that in the budget. All right. And if you do, you got to go back and massage your budget and everything else like that. Spending plan is designed to tell you, or to tell your money how you want your money to work for you. All right. So, for example, rent might be a fixed cost. All right. But and insurance might be a fixed cost. But what about food? It's like, well, you know what? I'd really like if my food budget were $600 a month. Let's say you had an entertainment cost. All right. And you're only spending $50 a month on entertainment. You know, what if you could spend, $200 a month on entertainment? All right. Now, the key here is, whatever these numbers are, it doesn't matter. What matters is that you put some numbers in, and then as you manage your numbers, you get clarity on that. So what we end up finding out here is that, all right, so this is how much money I want to spend. And this is how much money I've been spending. So that's $28.75. We'll put that, let's put that over here. Do that, do this. So give me 1 second. Okay. So now I know that my budget averages $26.75 per month, but my ideal spending is $28.75 per month. So we use a spending plan to help us live a better life, as opposed to a limiting life of that's the only amount of money that I have to spend. All right. And this is just a very small example. There's a lot that goes into this, and it's unique to each individual person. But anyway, just to give you the idea. So my point here is now that you've got a number, and you're going to take this larger number, $28.75, and you're going to be like, okay, every month I need to be able to take out a total of $2,875 from my business. All right. You might take that out weekly, or you divide that by 4 and you take out that portion every week, or you take it out bi-weekly, whatever it is, whatever works for you. Bi-monthly, it doesn't matter. But you know that you're going to take out $28.75 per month to meet your expenses from your business. So that means that you know that your business has to have a net profit of at least $2,875 in order for you to withdraw that money from your business without damaging your business. All right. And all of a sudden the light bulbs go off, right? Or go on, right? we get ideas like, oh, wow, okay, this makes sense now, right? So now we understand why we need to know what our personal expenses are, what our personal budget is, so that we know what we need to get out of our business. And that doesn't mean you don't take more. If your business is really flourishing and you want to give yourself a raise, give yourself a raise. But when you start, you need to know this, because the last thing you want to do is take out $2,875 from your business when it's already losing money. Now you can't pay your business rent or your business expenses. And now you're not able to deliver products and services to your customers, which puts you out of business. All right. So it's very important to recognize it in that perspective. So now what I want to do is show some financial reports here. So let me go to here, presentation. We're going to look at some financial reports here. We may not have time. We're not going to have time to get through all these financial reports. Maybe I should do a part 2 for this, because, I've only scheduled this for an hour. And the first part of this content was really important. And so maybe, we do a part 2 of this. I'll start to get into the first couple of the spreadsheets. And then if we do a part 2, I'll have the Facebook and YouTube desktop sharing issue fixed, so that those of you on there will be able to see what I'm actually presenting, instead of having to make up vivid visualizations in your mind about it, envisioning the green spreadsheets in Microsoft Excel, etc. So I do want to start with, go these in reverse order. And the first one would be startup expenses, and looking at our startup expenses. That's the first one that we're going to look at. And I'm just going to describe it, and I am going to do a part 2 on this. So there's just no way to get through all this material in 10 minutes. It would be silly of me to even try to do that. So I guess I was a little bit overzealous when I created the presentation outline on here. So my apologies for that, but it's great for you because you're going to get all the meat and potatoes, as it were, next week. And maybe even vegan meat and potatoes for those of us that partake that way. Okay, so now I've got a couple. By the way, when you registered for this presentation, there was a link inside that registration on our Meetup group and in the Facebook post. All right. There was a link there that gave you access to, I don't know, 50 different kinds of files, you know, business plans, spreadsheets, profit and loss, et cetera, et cetera. If you're on Zoom, you can see all this. If you're on Facebook and YouTube, I'm sorry you can't, because I can't share the desktop. So, but trust me that if you go back to that the Meetup group there, to the link, the registration link there, you will see the link for all the workshop resources. And even before next week, you can get in there, download the files. Most of these files came from SCORE, SBA SCORE. They're all legitimate. They're all user-friendly. They all have descriptions on how to use them, how to fill them out, what to put in, what not to put in, etc. So the startup expenses is a great worksheet to use to help you flush out in your mind, not just in your mind, to flush out of your mind, all the expenses that you're going to need to actually start your business. Okay. And I know on Facebook and YouTube you can't see this, and again, forgive me for that, but you will next week. Well, you will as soon as you download these files, so please do that. So it's called Startup Expenses, and if you download that and open it, let me make this a little bit bigger, you'll begin to see all the details that are inside, and there are descriptions on how to prepare this document. And again, this particular document is from SCORE. You can go to score.org or sba.gov, and access SCORE that way. But once you get into SCORE, you'll click on resources, and it'll give you business plans and financial spreadsheets and everything than you'd ever want to know how to use. So that's where you go. That's how you find this information. And I've used these worksheets many times. So startup, I'll just go over the categories here, and then we'll wind things down a little bit. Again, my apologies. I feel bad about that because I know that I marketed this as, 1 hour. Let's get into the financials of this, and we're only now just getting to cover it here at 5 minutes to the hour. So we'll make the best of it. Hopefully you'll give me a second chance next week, and we'll go from there. So it's going to ask you for information about yourself and your percentage of ownership in your business, especially if you have other investors. And there are silent investors and there's active investors. There are investors who are angels, who say, here's $10,000 at 1% interest. And then you'll have venture capitalists who will say, here's $10,000 at 75% interest, and we want 51% control. All right. Maybe a little bit facetious, but not so much. Depending on your business, you might require venture capital, and there's nothing wrong with venture capital. It's awesome. All right. In the right scenarios. Okay. But the point is to be clear about where your initial investment is coming from. And you may not have a clear idea of how much that initial investment is until you finish this worksheet. And that's okay. Because a lot of people, once you start talking about your business, oh, how much do you need? How much do you need? And you just start pulling numbers out of thin air. And then you talk to that same person again. Hey, did you come up with that 20,000? Well, it turns out that it was 75,000. And they're like, ooh, wow, that's a big difference. And they're going to be like in their mind, oh, I'm glad I didn't invest in that. This person doesn't know what's going on. So, and I don't mean that in any negative way whatsoever. It's just about having that clarity so that when you're talking about your business, that you have clarity and you have consistency. Okay. So Understanding who your investments are and their role, their amounts that they're putting in, and also any banks loans that you're going to put in. So all that's right at the top, and any other loans. And then as we scroll down, we kind of start to get into the meat and potatoes of it, vegan meat and potatoes, whatever the case might be. If you've got business, if you've got buildings or real estate, are you purchasing a building? Are you purchasing real estate? Are you renting? All right, you'll do rentals later on, but if you own any kind of real estate for your business, you want to identify the cost of that, the capital investment required for that. Maybe you need to build something. You need to build a building or remodel a building. Whatever those costs are, you want to enumerate them in as much detail as you possibly can and insert that information here. There's something called leasehold improvements. If you are renting a store space, all right, or an office space, it's usually given to you as a shell, just the walls and a floor and some kind of ceiling. And if you make any improvements to that, which you cannot take with you when you leave, those are called leasehold improvements. And basically that means that you are investing into, you're putting capital money into that building. Now you get to write it off through depreciation and tax expenses and things like that, but nonetheless, it's money that you're spending on a building to get your space in the condition that you want it to serve your customers, all right, and support your employees. All right, great example is a restaurant. You go in, you've got 4 walls, and you got to build the kitchen, you got to build the front area, you got to build the receptionist, your coat rooms, whatever the case might be. All right. So some of those things might be leasehold improvements. If you glue a carpet down, you put a wood floor down, you put tile on the walls, you put a tin roof ceiling in or whatever. Those are things you don't take with you. They become part of the building when you leave. So that's called a leasehold improvement. So I'm going to leave it there. We'll circle back when we start back next week. I'm just going to start back at the beginning of this particular startup expenses worksheet. And I'd like you to take some time and download the resources, go through the startup expense worksheet. So maybe you have some questions, and I'm happy to answer those questions. You can send me an email or text me or whatever. I'm happy to help any way I can, and anything I can do to help you be successful. So in that regard, again, I apologize to those of you on Facebook Live and on YouTube through StreamYard that I wasn't able to share my desktop. I will get that fixed. And for those of you on Zoom that saw that, excellent. And I want to thank everybody for participating and for showing up. Congratulations on wanting to start a new business. I think it's fantastic, and I wish you all the best success. All right. So thank you very much for spending part of your Wednesday night learning about some financial aspects of managing your business. And we'll see you next week for part 2. All right. Thanks so much. Have a good night.